Good afternoon and welcome to CanadianAgMarkets.com. My name is Brian Como. Today is June the 20th, 2025. We did take the day off yesterday just as the US markets were closed, but we're back at her today and ready to go. All right, let's take a look at markets today. We have canola down $1.30 at 742.70. You may notice here that I have adjusted a lot of the months that I've been referring to here to either showcase new crop in a lot of cases, or either maybe the most liquid or the most the contract with the most open interest. So you may see that I'm not using front months necessarily on all of these, but I think that they're the ones that are the most relevant. So let's get back into it. Canola down $1.30, 742.70. Minneapolis wheat down 3.25 today at 675.50. Kansas wheat down 7.75 today at 578.75. Chicago wheat down 7 at 583.5. Soybeans down 7.5 at 1060.75. Soybean oil down slightly at 55.10. Corn down 4.75 at 428.75. Sorry. Canadian dollar 72.80. It's dropped now below 73 cents after being up near 74 cents, maybe a little more than a week ago. Live cattle down $1.27 hundredweight at 209.83. Feeder cattle down 172 at 302.45. I think, it looks like a sea of red on the futures today, but I think it's important to look at the weekly kind of performance of a lot of these commodities today. This is a chart that we show on our weekly report at the end of the week, and it details or shows, change over last week. So I think this is important because it looked like a weak day today on the markets, but when you really put it into perspective from a weekly standpoint, we've seen $19.30 in gains on the November canola. We've seen $13.75 or 13.75 cents gains on the Minneapolis wheat. Almost 2 bits on both the Chicago and the Kansas wheat markets. 6 cents in the soybean pit. Soybean oil up 3.90 or 3.9 cents per pound. We did see some losses in corn, obviously the Canadian dollar, and the cattle markets as well have come off a little bit. But just to kind of put things into perspective, and again, this is a chart that we show in our weekly report that is available to our premium subscribers. As a beautiful segue to our premium subscribers, you can become a premium subscriber for only $99 a month. You can cancel anytime. There's no commitment to continue, and you can give us a try. Just to kind of lay out what we have for our premium subscribers this week, we put out a special report on Wednesday about hedging canola and when the right time for that may be. Lots of detail in there that you might want to get a hold of. If you do want that report, which I think is a really good one, if you subscribe to our premium service, send us a message that you want this backdated report. We'll get that off to you, no problem. Here's our weekly report that we just released a little less than an hour ago today, I guess. We talk about, canola stocks and what that looks like from a statistical standpoint, and then we dive into weather. Also, we have our proprietary acreage estimates in this report for the upcoming Statistics Canada acreage report next Friday. All right, let's get into the markets today. We did see canola make a new high. We actually continue to see canola make a new high. I think this is, let's see, 1, 2, 3, 4, 5, 6, 7 sessions in a row. Canola has made a new high. Now, it didn't always close at that high or in a high position, but for 7 sessions in a row, canola has made a new high. Today, we did see it back off a little bit after making those highs did punch up above the 750 mark on the November. Just amazing performance on canola. Again, we explained fundamentally in our weekly report why that might be happening. But just great performance on the canola as the supply tightens up and weather becomes a major concern in a lot of areas of Canada as well. We have a little bit on weather at the end of this segment here. Here's the continuation of the canola chart. Now, here's that 735 area here, where the recent top was, where we blew through this. Sorry, this is a weekly continuation. So this week we actually moved above that We have lots of room here now. This is a Fibonacci extension on the weekly continuation. The 38.2 is up now at 800, and the 820 lines up with the 50% Fibonacci extension. Now look where that is. It's right where this cluster of weekly highs came in July last year, or sorry, July of 2022, I believe, or 2023, I believe that is. So there is some potential weekly technicals that, could pull this higher, just like the moon kind of pulls the ocean up during the rising tide kind of thing. So there is some momentum here. I mean, there's obviously a lot of pivot points that could come into play on the shorter term chart. But, still favorable look to the canola overall. But we do want to make sure that we are hedging properly in this canola market as we move higher. Hence why we put out some guidance on how to do that while still maintaining exposure to the upside as well. All right, moving into the wheat markets. There's a lot of weather anxiety in the wheat markets right now. Europe is having some issues on the weather front. The U.S. plains spurred some short covering wheat rally today. I'm actually showing you the Minneapolis wheat here, but this is the weekly Minneapolis chart. As you can see, we did move above the 50-week or the 100-week moving average today. There is some resistance at the $7 mark, etc. So good performance on the Minneapolis today, this week, even though it was the weaker of the wheat markets. I'm going to kind of pull back a little bit here, or pull forward a little bit here on go back to daily charts. This is September, Kansas. As you can see, that 100-day moving average was taken out on Wednesday. Today we saw it punch to a new high at 590. This is the SEP again, but it did fade out into the end of the day. Some of the strength is coming from rains that have been delaying harvest. Here is the 7-day observed accumulated precipitation. Lots of rain in the Oklahoma, which is pausing a lot of wheat harvest as well as some of these areas here. Kansas isn't so bad, but it did get enough rains that it did stall a lot of harvest. Nebraska is stalling some harvest there as well. So, the rains are slowing harvest overall. Probably will see a below average harvest percentage again this week as we go into the crop condition ratings on Monday. So that's one of the factors that is affecting the wheat market. I did mention that short covering was one of them as well. The wheat market had been actually kind of coming out of their large short. They had been buying back, but they still had a relatively large short position. Again, we saw a triggering of short covering. This actually moved Chicago again above the 200-day moving average. That's a positive. It didn't stay there, so it's kind of a neutral, I guess. It did act as a pivot point today. We did see it move lower overall. We're still very high compared to where we were at the beginning of last week. So hopefully that momentum can move forward into the coming weeks. All we need is a small rally in this market before we want to take some advantage of that. I do believe that is as far as cash markets go in Canada. I think that elevator companies may fade their bids and things like that as the futures go up. So just be aware of that. Cash prices may not advance as much as the futures are, which may give you some reason to kind of have some discussions about separating your futures and basis and hedging them at different times. All right, into the soybean market, I think we did see some resistance play in here as we got into the 1075 area. This is 1075 resistance here from back in February. It did kind of test that today before falling. So again, that'll be pretty strong resistance to break. Export sales were strong. Old crop was 540,000 tons, new crop 75,000 tons. That old crop was a 14-week high. We still have some crop watch flags overall. And conditions aren't quite as good as some may want them to be. Export demand and weather uncertainty obviously are driving some of the strength, but it's a kind of a delicate balance as technical selling here tempers later gains. There's lots of question marks still around demand, particularly with China and with the large crop in South America. Corn continues to kind of trade near lows, although we did see gains on Tuesday and Wednesday. The market break on Thursday. Today we saw some losses. This market continues to struggle to get above the 20-day moving average. Nothing really exciting. I wouldn't get too excited here yet. It still seems to be trolling the bottom of the market. At least it seems to have put in some lows near the 420 area. So that may be a positive or something to hang your hat on. But there isn't much in the way of bullish inputs yet. If we do get a hot and dry spell in the US Midwest, that may be something to look out for as we move through kind of the silking stage of the corn. There was a lot of, particularly if that heat wave comes earlier than normal, as the crop was planted a little earlier than normal. All right, getting into weather. Here is the 7-day accumulated precipitation into June 19th. So that is yesterday. Lots of rain here in the north central parts of Alberta, except the very eastern part of that region, which is where the bulk of our customers are. It did not receive as much rain as was advertised, and doesn't look like they're going to receive a whole lot of it in the coming days either. So, lots of folks are happy about the rain that happened if you did get those rains, but there were lots that got underwhelming amounts of precipitation in a lot of areas. Some of these areas like southern Alberta and this southeast western part of Saskatchewan are going to get some reprieve as we move forward. Here's the 120-day or 5-day forecast from noon today. And looks like there's some heavy rain here along the mountains, but and it kind of pushes through central Saskatchewan as well, with some lighter stuff coming into the south. So some areas should receive some good rains in the next 5 days. But again, this kind of this north central eastern area of Alberta still is at risk quite significantly. All right, that is all we have for you today. Thank you for joining us. We will see you again next week. Have a great weekend, and we'll see you tomorrow. We'll see you on Monday.